viewers from across Nigeria and around the world. Thank you for joining us on the 15th edition of CITN TAXATION and You. Today, we will have a very special guest in our midst in the person of Mr. Martin Aroge. Mr. Martin Aroge, partner, Tax Regulatory and People Services Division, Energy and Natural Resources Line of Business at KPMG, the global firm that we all know. Mr. Martin Aroge, welcome to CITN TAXATION and You.
Thank you very much.
Yeah, it's nice having you. We've always had you on our radar, but so it's time today. So yeah, we're here to talk about for our viewers. Yeah, just a quick rundown. Our viewers are made up of the ordinary taxpayers, right? Those are the low level there, in terms of professionalism. Our members, right? The administrators and regulators. And also, of course, other stakeholders. So at this program, we use general language, not going too techy or too technical or legal, so that they can connect with. So audience around Nigeria and the world, we're here to discuss the topic, the successful relationship between tax consultants and external auditors. Successful relationship, working relationship with tax consultants and external auditors. We are happy to have you because you are from one of the biggest firm in the world, KPMG. From your field experience so far, there been, is it what you've witnessed where there are frictions, right, between what the tax consultant is saying or doing and what the external auditor is trying to tidy up from his end? Just take us through.
Okay. Yes, you would find, and the reason isn't very far-fetched, and it's all around risk and what each party is doing. The methodology for external audit is a bit different for what you would do if you were doing tax consulting work or tax compliance work. And we live in a climate where people expect there to be a complete reconciliation between what you see in your audited financial statements and then what you then file with the tax authorities. A few years ago, I was privileged to be on secondment to KPMG in the UK. Okay. And for the first time, I realized that there was a significant disconnect between what people prepared for the purpose of putting in their audited accounts and what they then filed to the tax authorities.
Even in the UK?
Yes. But,
interesting.
But in Nigeria, what you would see is that people are very reluctant to pay two sets of costs.
Okay.
So while in the UK then, companies were willing to pay you to do a review for audit purposes and a review for filing purposes. Okay. In Nigeria, people only want to pay once. And when you pay once, what it means is that what you put in your audited accounts would be the same thing that you file with the tax authorities. Again, like I said, because you are both people are from, I won't say opposite ends, but what guides them are very, very different. Okay. And I'll give you an example. An external auditor would say, I would like to be. It not would say I would like to, because it's a tenet, it's a principle of accounting. You need to be prudent. Okay. So if there are doubts over a particular item, an external auditor would say, is it material? If it's material, I need to take a position and say, is it more likely than not that this position will crystallize? Okay. And if you say it's more likely than not, then the external auditor would probably decide that they will take a conservative view of that particular item. But the taxman would say, oh, I think that we can argue this. And it is my self-assessment. Remember, we file tax returns in Nigeria based on self-assessment basis. So it's my self-assessment, it's my own interpretation. If I think that there is a basis to allow this, I would allow it. Because why would I? It's like you have the opportunity to mark your own script, and you decide to give yourself 0 because you are not sure what you've done. So it's a different thing when you know clearly that I've not done this thing is not correct. So you can say 0, but it can be argued in that here or there, and I'm the one marking it. Why would I then take the punitive position? That's the whole concept of self-assessment. So he says, you do your self-assessment, I, as a tax authority, I will come and review. And if there are areas where we can't agree, it's not that me or the tax authorities that will determine. We go to an independent arbiter.
Okay.
So, but if the auditor believes that this thing is capable of going to that extent, he says it's not very clear. So let's take a conservative approach, because the principles of accounting say we need to be prudent. The taxman says, I think that there is an argument, we can have an argument. So I would rather err on the side of my clients than take a punitive approach and punish my client today for something that if I argue in 4 years' time when they come for audit, I may very well be successful. Okay. So that's where you typically find the start of conflicts.
Wow. Thank you for that direction, the way you have dissected it. So now, is it possible, you see, when a tax consultant is engaged, or when an external auditor is engaged, is it possible, or is it a practice, is it also realistic that there will be some form of a meeting of the mind, like a meeting where, hey, I'm the external auditor, you are the tax consultant. Can we have a meeting where we kind of chart our professional way forward, working relationship, to mitigate likely friction that may come up in the future?
Yes, and so what you typically would find is, and which is what you have as a standard audit practice, is that there should be a meeting.
Okay.
There should actually be, so from the audit planning,
okay,
everybody who's involved in that process, the external auditor, the tax consultant, the client personnel, they should all be involved in audit planning. And like in every human relationship, if there is mutual respect, it goes a long way in soothing some of these frayed nerves. And you cannot respect someone that you don't know and you've never really had any interaction, either formally or informally. I can see you from afar. I can have an idea of what kind of person that you are. But it's a different thing if I've been in a room with you, I've had a personal conversation with you. It goes a long way so that when it doesn't mean there will be no conflicts.
Okay.
It doesn't mean, because again, if we are both coming from two different, it's like two people raised under two different backgrounds in two different homes. When they come together, they will not agree on everything. But because there is that mutual respect already, it then helps in how you then resolve it. And it's more pronounced in instances where you have a different firm serving as tax consultants and a different firm serving as external auditors. Because what you see most of the time in practice is that most auditors are comfortable asking their tax people to also review and say, I would like an opinion from my own in-house person, because at the end of the day, the person whose signature is on those accounts, who attests to those accounts, is not the tax consultant. It's the external auditor. If those accounts do not reflect a true and fair view, nobody goes back to say who did the tax returns. Nobody goes back to say who provided the tax numbers. The person that they would ask for is who signed up on this account, who held this out to be true and fair. So if I have a tax partner in my practice who carries the same risk as I do, I expect that it's more likely that he will understand things from my point of view, because he knows that if we do a bad audit, if an account that we've signed is deemed to be not reflective of a client's accounting and financial position, the firm will be at risk. And the firm, his name is also on the board as a partner on that firm. So you won't say, oh, only the audit partners of the firm will be impacted. The tax partners in that firm will be impacted too. So he's more likely to err on the side of reliance on the opinion of his tax people than an external person. So that's also another area where you find conflict, because you then gives it to his tax people who may have a different view from what you have. So we've seen, I've had instances where a client did some work. They got their tax advisor to provide them with some opinion on a particular matter. And my audit team asked me for an opinion, and it was very different. Was very, very different.
Same matter, different opinion.
Yes.
Different professional opinions.
Different professional opinions. Now, my audit team were would be more inclined to rely on my opinion, because there is mutual trust. There is, and when you look at a lot of these things are subjects of interpretation at the end of the day. It doesn't mean one person is right or one person is wrong. But what it means is that we both have a difference of opinion, a different interpretation of a particular matter. And it then has another impact in terms of financial on the issues being discussed. So you would expect that as a company, you would have to, you can't report, you can't take two opinions, it has to be one. So you need to find a way to get both of them to come to understanding. So you join all of those meetings, you have those conversations, you discuss the points. You are at the end of the day, it is the auditor's responsibility what goes into the account. But it has the benefit of listening to a variety of opinions on the matter. But it has to take a judgment call.
Okay, wow, great, thank you. Now, I want to go to something touchy, which borders on ethics. You see a situation where practically the same big consulting firm, for example, is offering both the external auditing services, right? And maybe another arm, maybe not just that, so maybe a related or a sister or something, offering tax consultancy services. What's your thought? What's your opinion? How ethical is that?
I don't think that there is anything unethical about it. Again, like I said, the firm that has a responsibility for signing up, the person who has the responsibility for signing up on those accounts is the audit partner, not the tax partner. And what you would have an issue with is someone having to review their own work. The audit partner is not a tax partner. The audit partner does not understand the peculiarities of the tax system. So you need a tax professional to do that.
Okay, even when the professionals are from the same firm, let's even limit it. You're the tax partner, you're an audit partner, but they're of the same firm. So go ahead.
So the audit partner would need somebody who has an understanding of tax to be able to review, understand, and advise. Now, like I said, when there is trust, it helps the process. So if I have a tax partner that has the ability to understand, interpret, and advise me, I don't see anything unethical in taking that advice. The judgment call will still remain with the audit partner, but it's always better to have someone that you have trust in his competence to be able to review those accounts, provide you with a tax opinion that you can then rely on.
Okay.
It doesn't mean another firm cannot do it, but I honestly don't see anything unethical in having one firm do both.
Okay. Now I want to go to something else touchy. Whose responsibility is it, right, to prepare or to compute or develop all information concerning deferred tax? Is it the tax consultant? Is it the external auditor? I'll say you smile at it.
Okay. Again, every information that goes into the financial statements is the responsibility, first of all, of the company. And the person who attests to its true and fair view is the external auditor.
Okay.
Now, there is a variety of information that goes into the audited financial statements. None of it is prepared by the external auditor.
Okay, of course.
None. In fact, the role of the external auditor is to confirm that what has been prepared is reflective of the client's financial position. So you would have general ledgers that are prepared by the company. You have bank statements that would have been obtained from the bank. You have vendor confirmations that have been obtained from vendors, customer confirmations that were
asset registers.
So everything is prepared by somebody that is external to the external auditor. The same thing with the fair tax.
Okay.
It's the responsibility of the company to prepare.
Okay.
Now, the company can engage a consultant for that purpose. It could be another audit firm. It could be a tax practitioner.
Okay.
Doesn't matter to the external auditor. What the external auditor would say is, I need to see your deferred tax position. it is then you that will present it. It doesn't matter to him who prepares it. Present it when I ask for it. I would review. So it's also important that the external auditor has the required skills to review. He has to understand it. So whether he prepares it or not, and he should not be preparing it anyway, but he needs to understand what has been prepared. Otherwise, he cannot review it. He cannot see that this is a true and fair reflection of the client's position if he has no understanding of what's been prepared. But it's the company's responsibility to prepare, either personally, through their own staff, or through a consultant who may be a tax consultant. Okay, but we know in practice, we know the reality that most time company push it, they push that responsibility. Yeah, we know under the camera, right? It is the duty of the board, right, to prepare and present financial statements, internal control system, and all of that. But we know in practice, right? What we see is that companies shift that responsibility to either the tax consultant or auditor. You look at it. What do you think? What do you think it should be? That's what informed that question. Okay, now let's go to a scenario where FRC, Financial Reporting Council, picks a financial or even tax authority in their routine every 4-year or X years audit, and they say this tax item, this amount, right, is not reflective of what it should be, or this amount should have been this, you paid less tax, you paid more tax, and all of that. In this process, the company will have to, an assessment is served, a reassessment or an advice is sent, the company will have to pay penalty, pay that. In that scenario, does anything drag in the external auditor into such discussions? Okay. Ordinarily, the answer should be no. Okay. Ordinarily, the answer should be no. Because so the external auditor should not even be, Because first of all, the financial information that would form the basis for the tax returns, you prepared as a company. All I did as auditor was certify it. Okay. If we propose some adjustments because we do not think that what you've submitted so far is a true and fair reflection, and so we think that you need to adjust 1, 2, 3, 4 transactions, lines, expense items, then that's to ensure that the account as a whole is more reflective. If we propose an adjustment, you would have copies of that proposal. We will discuss that proposal with you. We would agree that proposal with you. You would still be the ones to pass those adjustments. So ordinarily, you should have all of the information that is necessary to respond to the tax authorities if they inquire in conjunction with your tax consultants. But in practice, what you would find is that record keeping is always an issue. It's a Nigerian issue, if we're being honest. So what you will find is people say, oh, the person who used to be in charge is no longer here. The audit firm never changes. Most audit firms have been here for years. We have under both CAMA and FRC the number of years that we should keep documents. So you know that the audit firms will probably still have those documents somewhere where they can easily reach it. So people tend to always go back to the auditors and say, can you help work with our tax consultants to retrieve this particular information and documentation that would help us respond to the tax authorities? It doesn't change the fact that responsibility is still, because if the auditor says to you, we don't have it because it's outside of our documentary intention, you're not going to transfer the liability to the auditors. You would still have to respond, and you would then need to deal with whatever liability comes out of it. But in practice, there's a whole lot of reliance on auditors to be able to work with the tax consultants to understand the numbers, understand the accounts, and then respond appropriately when those accounts are queried by the tax authorities. Well, thank you so much. I want to go to the issue of the tax frameworks. If you look at it, the laws are there, right? A tax consultant want to submit, right, tax return through the tax frameworks, log in and submit. The question is, if that tax consultant, should he or she submit or file, through tax framework using draft account or detailed account? What should be, you are the auditor, you are not part of that, that's not your call, right? But the financial used, right, which is going to be a representative of a company that has a certain external auditor somewhere. So the question is, that financial to be filed, to be submitted to tax frameworks, for example, or even physically, should it be,
at any point, can it be draft account for tax formers purposes? Or must it be finalized audited account?
There is nowhere in any law that any reference is made to draft accounts. It's audited financial statements.
Audited financial statements.
Audited financial statements.
Okay.
Now, but it will be remiss we don't talk about what happens in practice, because we know that in practice, there are instances where draft accounts are filed. And the reason again isn't very, very far-fetched. There are two separate types of penalties that you will be liable to when it comes to filing of returns. The first one is a late filing penalty.
Okay.
Now, if I file draft accounts, my opinion is that I have not filed. Because under the law, it's as if you filed nothing. Because again, like I said, there is no reference to draft accounts under the law.
Okay.
So what then happens is that, and tax authorities they are still at liberty to treat it like you filed no accounts.
Okay. Okay.
And so they can continue to charge you to that penalty for late filing. However, there is also a second penalty for late payments. And you cannot pay without a basis. You can't determine a number from off the top of your head and say, I dreamt, and when I dreamt, I saw 1 million. Therefore, I believe that my tax liability for this year should be 1 million. Go and pay 1 million. So in instances where people believe that they will be unable to file on time, and then want to then determine a basis for what they pay, so as to avoid the late payment penalty, at least a portion of the late payment penalty, because if what you pay, when you then determine your actual numbers when you have your audited account, if what you pay is less than what you should have paid, there will still be a late payment penalty. It will not be on the full amount, it will just be on the difference.
That portion.
Yeah. So in trying to determine how much I would pay, I would say to myself, how do I determine it, since I cannot use an angel came to me at night and told me the number? One way is to say, how much did I pay last year?
Okay.
Do I think that my business has grown from last year or not? I can look at it and say, I believe, because you may not have audited account, but there is no company that is serious that will not have a management account on a month-by-month basis. Okay. You know how your business is doing. So you can say, oh, in terms of profitability, we've grown by 10% this year. It does not mean that your tax payable will grow by the same amount, because it may be that maybe some of the additional income that you've earned this year is non-taxable. Who knows? Okay. But you don't have, so you just do a rough estimate and say, we've grown by 10%. We paid 100 naira last year, so let's pay 110 this year. So that's one basis. The second basis is to say, I would use the draft accounts that I have today as if it is my audited financial statement. I will prepare tax returns based on that draft account, and whatever number that comes out of it, I would pay based on that. So that's also a basis. So that's where draft account becomes relevant, because it then helps you manage the potential for late payment penalty. For the tax authorities, money is money.
Yes, that's correct.
So if I have the opportunity to collect money today, why wait for an audited financial statement that I don't know when you will complete, and it's totally within your control? I'm not the one doing it for you. If you say it will take you 6 months, would I wait 6 months to collect my money? Government needs to run. So if you use the draft as a basis for preparing and paying me, I will collect the money. Have you paid? Yes, you've paid. I cannot charge you penalty and interest for money you've given me and say, because I do not know how you gave me the money. But the money was with you. I could have kept it in the bank and be earning interest also, but I gave you the money instead. So that's where the concept of draft accounts actually come into play.
Okay. So in other words, it could be helpful.
Yes.
Thank you so much. Now let's look at Financial Reporting Council of Nigeria. Probably they're reviewing something account. They now spotted that of your clients and now say, no, this is wrong, this is wrong, this is right, this is wrong. And some of the line items they spotted to be wrong have to do with tax items and tax information. Ordinary, who should be summoned? Is it only the company and the external auditor, or the company and the tax consultant because the tax item, or the company, the external auditor, and a tax consultant? What do you think should be the the best practice?
It comes back to what I've consistently said. The person who has responsibility for signing is the external auditor.
Okay.
What you will find in practice is when the external auditor, when he gets the tax numbers, he doesn't just get a number. At least what we will do as KPMG is that we will not just give you a number, we'll give you an explanation for that number.
Okay.
So there is there's a detailed memorandum that explains how we arrived at that number. What were the things we considered? What were the things we did not consider? Why did we consider? Why did we not consider? So you have the opportunity to review and query.
Okay.
And say, I understand what you said here, and I might not be a taxman, but the logic makes sense. I don't understand what you said here. I don't think the logic makes sense. Can you explain further? And if the external auditor is not convinced, is at liberty to say to the client, I know you've used your tax consultant, but I want to use a third party because I want to get a second opinion on this matter. Now, what you find in practice, and it's always good to mention what practice again, so that people don't think that this is how it happens. What you find in practice is cost is always an issue. So I say to you, as long as you take it out from your audit fee and pay the third party.
Okay.
Meanwhile, me and you will spend almost 9 months arguing this audit fee. I told you that cost of living has gone up in Nigeria. Meanwhile, you expected me to cut down the audit fee. We finally agreed. We finally agreed on an audit fee, and I don't think it's a reasonable fee anyway, but I accepted it. And now you're saying I will have to pay a third party out of that audit fee. So in those kind of instances, always also problematic, because you are saying to yourself, I have responsibility for what I sign, and I need to be sure that what I sign off on is to a reasonable extent will stand the test of time.
Okay.
So do I incur that cost, or do I get the company to pay for that cost? Now the company is saying they won't pay. So it's always a judgment call. Do I think that the item is material enough? Do I think that the issues are significant enough? And if the answer to both is yes, what you will find is that some auditors will probably say, okay, we'll bear the cost. Some, depending on their relationship. And in a lot of instances, people have these conversations up front.
Okay.
It's always very important as an auditor that you have the conversation. What will be the source of the tax numbers? Would you be providing it internally?
Okay.
Would you be getting it from a third party? Who is that third party? How credible is that third party? Because I need to do my evaluation. If I don't believe that the third party is credible, or I don't believe that I can rely on the work of the third party, I would say to you, I want to get a third opinion. So we need to factor that cost already into the audit fee from the get-go. So all of these conversations are part and parcel of the process. I might not even say it to you, but I factored it into my audit fee that I will get a second opinion. So in quoting for the audits, I've asked that question. You may not know I've asked that question, who are your tax consultants? But I want to determine whether I can rely on their tax work or whether I would need to get a second opinion. And what you will find is if I get a second opinion this year, it aligns with yours. I get the second opinion the next year, it aligns with yours. I get the second opinion the third year, it aligns with yours. Then I probably believe at that point that I don't need a second opinion anymore, unless there is now a change in the reporting concept and principles that you've used in preparing the accounts. Maybe there's a different type of transaction that is outside of the norm that you then engage in a particular year. Yeah. So that's maybe when I would then get a second opinion. So when FRC has that concern, because it is the auditor that signed off, irrespective of what process is undertaken to get to the point where he signed off, he needs to take responsibility for what he signed off on. So the reason I explained all the process is to say the auditor has recourse to ensure that whatever he signs off on, whether it is tax numbers, actuarial numbers, he has recourse.
Property valuation, whatsoever.
Whatever it is, he has recourse to ensure that that thing is correct and reflective. So you would call him. Now, if I were summoned by the FRC and I noticed that one of the issues that they picked is a tax issue, I would insist that a tax consultant go with me.
Okay.
Because nobody can explain it better than a tax professional. It doesn't mean that if they say, oh, we don't agree with what your tax professional has explained, that they will then sanction the tax professional, because at the end of the day, it is the auditor that makes the judgment call.
Okay.
Is all you need to do is present him with the basis for your information, the basis for his decision. It is him that makes that decision. So yes, let the tax consultant come, let him explain. The company would always be there to let them explain what they've done. But if I say I'm not happy as FIRC, the responsibility would still be with the external auditor.
Wow, thank you, Mr. Martin Aroge. It is very detailed and extensive, the way you've taken each of these points. Thank you so much for your explanation. So it's time for us to open up our line. So if you have a question, contribution concerning, successful relationship, between tax consultant and external auditors, you have question, you have contribution, please use the palm icon. Use the palm icon so that we can beckon on you. When you're mute, you just go straight to the point because of others who are going to have questions to ask. So use the palm icon so that we can call on you to ask a question, make a contribution, and please, let us keep it to the topic of the matter, right? Then this is not a consulting session. If you want to consult properly, you meet KPMG, meet Martin Aroge at KPMG, and then let's take it up from there. So let's start from Mr. Peter Oloniyo. Is that okay? Can you unmute, Mr. Peter? We are listening.
Yeah, good morning. Thank you very much for this opportunity. Okay, I just want to ask in relation to what we are discussing, and this has to do with who qualifies to be a tax consultant. So sometimes you have companies operating like as tax consultant, but maybe the person in charge of that outfit is not a chartered member of CITN. However, he has been practicing for long, or he has a BSc in accounting and all that. So most time you have this argument when you go to the tax office, and they say, no, you have to bring this certificate of tax consultation or tax consultant. So I just want to confirm. And this way we always have issues where they are saying you have to have a tax CITN certificate. Meanwhile, you have been practicing for long, or you are a graduate with additional qualification in accounting and all that. So that's just the question I want to ask. Thank you very much. I appreciate it.
Thank you. I won't preempt Mr. Aroge. I'll let him to give his thought on that. Because I know he's a CITN member. I know he's a CITN member. You are not a tax consultant. But go ahead, sir.
I think I will allow the institute to answer that question. But what I would say is that there is significant benefit in being a member of CITN and having a member of CITN work and prepare your accounts. Training is unique. The fact that you read accounting in school, or that you don't prepare you to be a tax practitioner, the skill set is also very, very different. The knowledge of the tax laws, interpretation, the practice, those are very unique skills that not everybody or anybody can pick from anywhere. So CITN helps you get those skills. When you was talking, you mentioned a number of training programs that are ongoing. So these are avenues for you to continue to update yourself. Tax laws are very, very dynamic, extremely dynamic. It's constantly changing. We've had the Finance Act 2019, 2020, 21, 22, 23. All of these things, if you are not a member of a professional institution such as CITN, it's harder to keep track. So while the issue of whether you can practice tax, I would let that be answered by CITN. I think that you should be a member of CITN. It's very, very important. It's a good to have. It's a very, very good to have.
Thank you, Mr. Aroge. Thank you so much for that response. So we'll go to Mr. Samson Ajibade. Mr. Samson Ajibade, may you unmute and just go straight. Just let's be fast as we can, because we have a whole lot to respond to.
Thank you, sir. My name is Samson Ajibade Mayowa. I'm a member of ICANN and also CITN. I just want to ask, is it out of place for one person to do the two work? see if you are a member of the both practitioner, in the sense that you audit and you also do the tax computation, especially for all these small firm that is virtually the one may be doing almost all. Like all those big firms that they normally have separation for this, you only mind this. But when you are in the small firm, it's like it's one man that is actually doing almost all the work for all those small companies. So I want to find out from that. Apart from that, even being a member of CITN, if you're a member and you have not even gone to apply for practicing license and you are already in the field, can you still do it without not getting that license, even though you are a member of CITN, but you have not gone extra mile because of the extra cost that you need to also bear and the rest? And all these things also,
Please,
is it also
can we just take
necessary?
those questions? We have too many people on the line,
Okay.
sir. So can you permit us
Okay,
to
no problem.
respond? Please, Mr. Jibade, bear with
Thank you,
us.
sir.
Thank you, thank you. So, Mr. Regi, over to you.
Thank you, Mr. Jibade. For your first question, which is pretty more straightforward and down my alley. I don't think one person, and you know there's a difference between one person and one firm.
Okay.
I don't think one person should be responsible because, again, if you listen to me when I spoke earlier, it is the responsibility of the company to prepare the numbers, whether it is tax numbers, whether it is fixed asset register, whatever numbers, it's responsibility of the company. If you as external auditor then take up the responsibility to prepare those same numbers, then you then create a self-review conflict, the self-review threat. Now, how do you then say that those numbers are true and reflective? I mentioned about when we review tax numbers for audit purposes, we just don't give a number. We also give a justification for how those numbers were arrived at. It's the responsibility of the auditor to then read that justification and then make a judgment call. You will be, if you are the one person who's preparing the justification and then reading that justification and then making that judgment call, there is no judgment call to be made. It's what you've justified that you already passed. So it would create an issue if it's now. If it's a small firm, it's a one-man firm. Now I understand where that challenge would be. But again, it's a matter of cost, which is also something I've also touched on in the past. You can have a conversation with your client and say, you don't have to be able to avoid this. Why don't we agree as part of the fee, a small fee that we can use to then engage a third party to run the tax numbers. If you have a different partner who handles tax, then that's a different matter entirely. You can have a conversation when they've looked at the tax numbers, and then you can then make your judgment call, but it's another person providing that opinion, not you. Or you can then ask your client and say, let's agree, because I know that the fees may not be too significant and you don't want to take out of your small fee to go and then begin to engage a third party. But that's a conversation you should have with the client rather than do everything as one person.
Thank you very much. Thank you very much. So let's quickly take Mr. Ikwoche Clement. Are you there? Ikwoche Clement, are you there, sir? If you're there, can you quickly come in with your question or comment so that I can run? Okay, let's go ahead to Mr. Said Mudashiru. Mr. Said Mudashiru, are you there? You know, mute and speak.
Yes, good afternoon. Good morning, everybody.
Yeah, good morning.
Okay, so my question is actually on interest and penalty on additional assessment as a result of a tax audit, especially for CIT and tertiary education tax. Fine, I want to understand the position of the Institute of Mr. Martin. I know there is a decided case that has to do with Weatherford. So we've seen in practice where we approach the FIRS or when the SLAM clients or our client interest and penalty on these CIT and TT, and we tell them this is not applicable and other based on decided law. But most times they often say there is nothing they can do, citing tax promax issue and all that. How is the institute trying to help practitioners in respect of this? I don't mind if Mr. Martins can also answer. Thank you very much.
Okay, Mr. Martin, did you get him?
Yeah, I got him. The problem is that I do not speak for the institute, so I cannot say how the institute is helping members. What I would say is that maybe that's something the institute can do a whole lot more around in terms of advocacy for contentious issues such as this. Serve as a rallying point where members can come up with all of these issues. Again, the tax is driven not only by accounting but also by law. Once anything is a subject of law, there would always be differences in interpretation. If you bring me and you bring my twin brother, even though I'm not a twin, I'm certain that we will not say everything in the same way. We would also have differences in opinion in certain aspects. So it's the same thing with tax. So maybe that's something CITN can do a whole lot better in terms of then saying, let's have a committee, and then if we have this kind of issues, people can bring them to CITN. We can formulate a position paper which we can then use in engaging the tax authorities, such that there is then general resolution. It will save people the time and the stress of having to even go to TAT on some of these issues. And there are you've mentioned interest and penalty, there are quite a few other issues that tax practitioners face, and we all go one by one to have the same conversations with the same set of people. So yes, I totally agree with you that issues such as that, they may be better handled by CITN having an umbrella. It could even be a monthly forum. So we have a monthly forum at CITN. We come and we say this has been our experience with the tax authorities. And if quite a number of people have that experience, then we say, okay, can we set up a committee to look at this issue, come up with a position paper for CITN, and then we can then engage the tax authorities based on that position paper. Most of the people at the tax authorities anyway are members of CITN. So there is already a good rapport already between CITN and them. So yes, I totally agree with you. And I think it's something that CITN should look into.
Thank you, Mr. Montaroge. Mr. Ikwoche Clement, are you back? Mr. Clement Ikwoche, are you there? If you are there, you may just speak. You've been unmuted. Okay, Tim, can we go to the chats? Do you have any question from the chat box? Someone, there is Mr. Umaria. Says, please, when to issue tax certification by the chartered tax practitioner? Is it annual tax return only, or inclusive of other tax consulting services? Mr. Omar, your question is not clear. It's not quite clear. You may need to re-chat it in. Let's get it. Mr. Martin is okay. Someone is asking the question of if a member of CITN can practice without a final license from CITN, go ahead and practice as a tax consultant was not. Okay, now, no, if you do not have CITN practice license, you can't practice as a tax practitioner. And that is the position of the institute. So that's why we didn't bother to, what you're not licensed to do it is illegal. So that is it. So CITN apply if you are qualified, then the appropriate committee will look at it, recommend to council, and council approves and grant you a practice license. There's a process. So this question says, the Nigeria tax formats did consider specialized industry in building their platform. How do you manage this in respect of an effort company who is exempted from tax? I think it's trying to say the tax formats wasn't developed to consider certain peculiarities. That how do you manage it?
Okay.
Sorry, before you go, you have to pay Mr. Roge for this, so because this is not part of the call. But this week is customer service week, so we're trying to join in the spirit of CITN to reach and practice a happy customer service week. So go ahead, Mr. Roge.
Okay. Tax Promax is like every technology platform you have anywhere in the world. There would be several iterations. For those of us who use Apple iPhones, you have iPhone 1, 2, 3, 4, 5, up to I think we're now at 15. Some of us gave up following a long time ago. But other than the opportunity to also ensure that they keep remaining in business and keep selling, there has to be something. There is always something different in each iPhone, and upgrades
Yes, yes.
There is always an upgrade. So if you buy iPhone 15 and you buy iPhone 14, there should be a difference in experience. It's the same way you have with every technology tool. If you use a laptop with Windows, one day you will just be typing and your system is about to shut down for an upgrade, or your system will shut down in 15 minutes for an upgrade. Automatic upgrade has been pushed from Microsoft. It's normal. It's very normal. I would have been very, very surprised if they got everything right at first go with Tax Pro Max. It is then our responsibility as users to, when we then notice that there is something they haven't got right, and we've done quite a lot as tax practitioners. When you notice those things, you bring it to their attention, you engage them, and then you work with them to understand what those challenges are. And there may be one or two things where they say, oh no, we didn't get this right, we didn't get this wrong. This is our own interpretation of the law. So, and our interpretation of the law says that this is how this thing should be. Now, that's a different matter entirely. But there are others that they would have done because they couldn't get it right from the first iteration. So when you bring those things to their attention, once they become aware, and to be very fair to them, we've seen them also take steps to address some of these issues with time. And so it would happen over a period of time. But it's very good today that we have an online filing platform that is being improved on a day-to-day basis. And we hope that very soon in future, all circumstances and situations would have been captured. I won't say that they didn't capture specialized business, because they captured the number of specialized businesses already. Okay. But again, like I said, there would always be things that they've missed out that they will continue to improve on per time.
Thank you so much. Someone asked me a question which I just want to respond to straight. Can any other professional body member apply for a tax personal license? E.g., I can. You can only apply for a personal license when you're already a member, when you're already admitted a member of CITN and you've met certain criteria like your practicing experience with a recognized tax consulting or tax practicing firm. Then you apply and pay your fees. So it doesn't come in that form. But as a member of other professional body, yeah, you can come in as direct member. Then after certain prerequisite, conditions set, you can then apply for practicing license. I think we've taken that from Maya. We told him to reset. Okay, so I think he has resent it. I think that's the resent square. He said, chartered tax practitioners are expected to issue tax certification letter, stamp, and seal same. Is this to be issued for filing annual tax return, or is this also required in other tax consulting services of the practitioner? Let me take it again. Chartered tax practitioners are expected to issue tax certification letter, stamp, and seal same. Okay, they are expected to issue tax certification letter, stamp it, and seal same. Is this to be issued for filing annual tax return, or is it also required in other tax consulting services of the tax practitioner? Mr. Roge, currently, what is the status like?
Okay, your stamp and seal ordinarily should accompany any document that you issue, because that's what authenticates it as having been issued by you. So if I see it anywhere, I know from where this emanated from. So yes, it should be accompanied. It should accompany every document that you issue to an external party.
Okay.
I had to add that so that you don't think it involves when you are sending your salary increment letter to your client.
Thank you. So back to us. Thank you for your question. Thank you for your comments. Now back to us. The issue of the public trust. Is there a nexus? Can anything be done? Can anything be done to ensure that the tax consulting services provided by the tax professional and the external audit service is done in such a way? Why do we have to have parallel accounts? For example, why do we need to have accounts this for tax authority, account this for maybe FRC or the banks? Is there a way tax professionals and external can work in sync, to build trust, public trust on the genuineness of, contents, tax contents in financial statements?
Okay. I think first of all, the first thing in terms of building public trust is getting the public to understand what the role of an external auditor is.
Okay.
Because I think that there's a whole lot of misconception around what the role of an external auditor is. I'll give you an example. There is a bank that went under in the US not too long ago, and people went on and said, who are their auditors? And someone told me a story that I could relate with, but it may be difficult for others without that experience to relate with. I'll say the story. And I don't know how true this is, even the person said it's a true life story, and it happened in Japan. So somebody was at a bus stop trying to get a bus, and it started raining, but the bus stop was not covered. So the person moved into a lobby of the bank just at the bus stop to get shield from the rain while waiting for the bus. Now, because the way the bank was structured, you had a very large lobby. So, but the lobby was inside. So there was a door. You went through the door to go into the lobby, and then you see the metal doors that lead you into the bank. So the person went there. Others coming, because it was around peak traffic time. People were going to work. Others coming in also moved into the lobby. So somebody driving to work that morning saw a large crowd in the lobby and thought this bank must be having issues. Everybody wants to come and withdraw their money. They're already there before 8. If all these people are here before 8, that means there's a problem with this bank. And then I must ensure that I come back. Once I go to the office, I report, I come back and withdraw my own money too. I cannot, because if everybody is withdrawing their money, when I come in the afternoon, they'll tell me there's no more money. And as he was going, when he got to the office, he told everybody that you could see that if you have money in this bank, you have to go. Because the crowd that I saw, there must be a problem in that bank that we don't know of. Now, those people now began to call their relatives and friends and say, if you have money in this bank, please go. They are having problems. It will soon go under. From people trying to shield from, just because the bank said, let's be friendly, and let's allow people come under and get shade. And that's what, all of a sudden, there was a run on the bank. And by afternoon, the bank had closed because it no longer had the resources to pay people. Because people assume that banks just keep the money waiting for us. But their businesses, they need to determine how much they believe based on their experience and history, people would withdraw on a day-to-day basis. That's what they keep.
True.
The money just, otherwise, where do you think the profits come from? They just keep it in a vault, and then you come, they give you back, and then they pay staff salaries on the inside. That's not how it works. So all of a sudden, there was a run. People came in the afternoon, and by this time, people were coming, and there was no money to give them, and now it had become real. And people said, oh, they had bad auditors. But the auditors would never have known that rain will fall and people will stand there.
Wow.
So when I signed up on the accounts and said the fundamentals of this bank was in order, I did not know that just one rain the next day would lead to a significant run and the bank going out of business. So I think the first thing is people having that understanding of what the role of an auditor is, and that they are not clairvoyant, they cannot see into the future. I think we've spent a lot of time treating audit as a very conservative business. So we stay in the shadows. And so it's helped then drive that misconception about the role of an auditor. For the taxman, the work that he does is fundamental to the success of every audit. So yes, they need to work together. But that first work has to be engaging the public, getting them to understand what the role of an auditor is. And that's only when you can build public trust. You cannot trust what you don't understand. It's impossible.
Well, thank you. I like that parting shot. It's a beautiful way to close it. Thank you, Mr. Martin Daroge, partner, Tax, Regulatory and People Services Division, Energy and Natural Resources line of business at KPMG. Thank you for taking out a very busy schedule to be here and still educate all the way from the island. So it's a whole lot. Thank you, sir, for coming. We want to thank our audience for being with us on the 15th edition of CITN TAXATION and you. Thank you for joining. The number was quite huge today, quite huge, demonstrating the interest we have in this topic. And for our guests in the studio, we want to thank the assistant president of the institute, Dr. Samuel Agbelui, for being with us. We thank all members of ESCO for supporting us. Then from the leadership secretariat, the registrar, chief executive, Dr. Larry Olasukomi, and operation team, our team at the back, you can't see them, but they're somewhere here, right? Making sure that the reason why you can hear us, that the reason why everything is the way it is going is good. Thank you, cameraman. Thank you, studio director and all the rest. So till we come your way again next month, November 2023, by the grace of God, we'll sign out. Thank you. Bye-bye.